Good afternoon and good morning to those of you that have joined us from overseas. We're just going to give it just a few minutes for everyone to settle in. Got a really important webinar this afternoon, which there's a lot going on, I think, in the CE area. So with all the different countries. Okay, well, I think we've run this time last year with ASB, so it's great to have everyone back today. As I mentioned just a few seconds ago, there's a lot going on in the CE region, a lot of payroll and labour law changes. So the team from ASB have provided their time this afternoon just to go through all of the different changes. So thank you so much. I'm going to pass you over to Lucy. Hi, Lucy. Thanks so much.
Hello, Melanie, and hello, everyone. Thank you for finding time to join our webinar. I'm Lucie Šťastná, head of payroll team in ASB Czech Republic, and I'm here together with Monika Marcin, managing director at ASB Group in Hungary, Justina Trochimiuk, head of payroll in ASB Group in Poland, and Maria Hildebrandová, head of payroll in ASB Group Slovakia. Today, as you know, we will be talking about payroll and labor law changes in CEE region, with particular emphasis on the situation in Czech Republic, Slovakia, Poland, and Hungary. Before we start, one very quick slide about us, about ASB Group. We are a business services and advisory firm focused on Central and Eastern Europe, especially the CE4 countries. We run a full scope of payroll and HR administration for clients from small entities to multinationals. We also provide accounting and financial reporting, tax compliance and tax advisory, transfer pricing, corporate services, and transaction advisory. So you can say a one-stop shop type of company. And the last information before we begin, after each presentation, there will be a slide with our contact details. If you have detailed questions about one of our markets, please feel free to contact us directly. And now I will walk you through the key employment, payroll, and tax changes in the Czech Republic for 2026 that are relevant for employers. The presentation is divided into two parts. Part 1 focuses on major legislative changes, entirely new obligations and compliance topics. Part 2 covers updates to limits, thresholds, and rates, which are important mainly from a payroll perspective. So, the most significant change for employers in 2026 is the introduction of the Unified Monthly Employer Report. This report, known as UMER, replaces a large number of separate reports currently submitted to different authorities, such as Financial Authority, Labour Office, and the Social Security Administration. Employers will submit one single electronic report per month, containing a much broader set of data on employees, wages, benefits, and working arrangements than today. Especially in the initial phase, UMER will significantly increase the administrative burden. Employers will need to collect more data, ensure higher accuracy, and align HR, payroll, and IT systems more closely than before. In practice, this is not just a payroll change, but a cross-functional project. The long-term objective, however, is the opposite. Once fully implemented, UMER should reduce overall reporting obligations, as the same data will be reused by multiple authorities. It is important to note that the health insurance companies are not yet part of the UMER, so reporting to health insurers will continue separately for now. Although the law is effective from January the 1st, practical implementation starts on April the 1st with retroactive reporting for January to March, due by the end of June. UMER also affects how agreements outside of standard employment, such as agreement on performance of work and agreement on working activity, are handled. For January to March 2026, there is no monthly UMER reporting yet, but employers must still keep complete records. All earnings for these agreements will then be reported retroactively via UMER after April the 1st. This means that preparation must start from the beginning of the year, even if reporting comes later. Another very important compliance topic is equal pay and pay transparency. Under EU rules, the Equal Pay Directive must be transposed by June 2026, with the first reporting covering data for 2026. If an unjustified gender pay gap exceeds 5%, employers will be required to take corrective action. Employees will also gain new rights, including the right to know salary ranges before interviews and to request comparative average pay information. In disputes, the burden of proof shifts to the employer. Even if national implementation is delayed, which is quite possible, equal pay obligations already exist under Czech law, so preparation should start now. Another change effective from January the 1st is a change related to health insurance. Certain advantages related to childcare will apply only to employees officially registered as state-insured persons with their health insurer. A simple declaration to the employer will no longer be sufficient. These employees need to request the confirmation from their health insurance companies and provide this confirmation to their employer. Employees must as well inform employers about any changes in their status. On the employer side, reporting obligations are partially simplified, and communication with health insurers becomes fully electronic. Overall, this is a manageable compliance update, but it does require some processes adjustments. From January the 1st, employers will have a new obligation to contribute to retirement savings for employees performing selected high-risk works. This applies only to specific categories, but where relevant, it represents a new mandatory cost and should be reflected in budgeting and payroll planning. Another notable change affects non-resident managing directors. From 2026, withholding tax will no longer apply. Instead, income will be taxed through the advanced tax system, similar to regular employees. These individuals will also be required to file a Czech tax return. This change is particularly relevant for international group structures. And now we can go to the second part, where I will only briefly highlight the most important numerical updates. The maximum assessment base for Social Security increases to 2,350,000 million Czech crowns, while contribution rates remained unchanged. Progressive income tax thresholds stay in place, with the higher 23% rate applying above the statutory limit. Non-cash employee benefits, their limits increase slightly as well, and thresholds for agreements outside employment are adjusted, triggering social and health insurance contributions once exceeded. The cash meal allowance limit is increased as well, and the minimum wage rises to 22,400 Czech crowns, which also affects the minimum health insurance base. These changes mainly require system updates rather than conceptual adjustments. Another change is in a calculation of wage garnishments. So your payroll systems really needs to be updated with the new procedure. To conclude, employers should focus on three things: preparing for UMER implementation, reviewing compliance with equal pay obligations, and ensuring payroll systems are updated for 2026 parameters. To summarize, 2026 brings several major changes, especially in reporting obligations and employer compliance. Early preparation will be key to managing administrative burden and avoiding unnecessary risks. Thank you for your attention. And now I will pass the control to my colleague Maria Hildebrandová.
Thank you, Lucy, and good afternoon again to everyone. My name is Maria Hildebrandová, and I am head of payroll in Slovakia, and that's why I will focus now on legislative changes in Slovakia. So we will start with the changes to the basic payroll figures, then move on to update in the sick leave compensation, new meaning higher rates of personal income tax and reduction of paid public holidays. After that, we will look at Schwarz system and briefly also to the equal pay transposition status here in Slovakia. So Lucy, if you can please move the slide twice or three times, please. Okay, so first, let's have a look at the minimum wage applicable in 2026. So the full-time employee paid by monthly salary is entitled to €915 minimum. Compared to previous year, this is increase of €99 or 12% if you wish. So it is the highest increase since the minimum wage law came into force in 1996. Also keep in mind that the minimum hourly salary you see here is not only to employees with agreed hourly salary, but also applies for agreement on work performance or student agreements. With regards to minimum wage, it is always important to mention also the guaranteed wage. So the guaranteed wage is a minimum wage for specific grade of job difficulty, meaning that if you onboard employee with relevant education, skills, and years of practice, then he or she is entitled to higher than minimum wage. So here in the table, you can see the guaranteed wage that applies in 2026. For the surcharges, I'm not going to name here all of them because due to the lack of the time, but you can check them in the presentation. They are all increased automatically because of increase of the minimum wage. And those last two, work on bank holiday and overtime, they didn't change at all because they are not linked to minimum wage, but to employees' average hourly salary. But I wanted to mention them to have the full picture. Then with regards to sick leave, we have the major change in the extension of the period during which wage compensation for sick leave is paid by the employer. So from January the 1st, the employer will pay wage compensation for the first 14 days of sick leave, compared to 10 days that was applicable in the past. Then if an employee receives any remuneration such as sales bonus or some regular provisions or other during long-term sick leave, caregiving leave or maternity leave, then full social insurance contributions will now apply. The maximum assessment base for 2026 was increased to €16,764. And in 2026, the percentage of health insurance paid by employee was increased from 4% to 5%. So for example, for employee with an average salary, which at the moment is 1,569 euro, loses just on this single change of the health insurance 188 euro per year. Then we can come to income tax, which, as I said, went through quite significant changes. And employees again will feel the tax mainly in their net wages. So the state introduces 4 tax brackets and also tightens the conditions for the non-taxable allowance. The monthly non-taxable allowance for 2026 is now 497 euro, and for monthly income over 3,665 euro, the non-taxable allowance is not applicable at all. So the income is taxed fully over this limit. Then those 4 tax brackets I mentioned, compared to the previous system when we only had 2 tax rates, 19 and 25%. Now we have progressive based on individual income up to 35%, again, depending on the income. And the higher rate only applies to the part of the income that is above the given limit for the lower rate. However, together with employees' higher contributions on health insurance that I mentioned before, it affects the net salary of employees significantly. So you have a small example there when the employee with monthly gross salary of 7,000 euro loses 123 euro on his monthly net salary compared to previous year, which is quite a lot, I would say. Then on the next slide, we have the tax bonus on child, which is the significant part of net salary since 2023 in Slovakia, when it reached a value of 140 euro per child. This year it remains the same as it was in 2025, when it was a bit lowered in value and also limited to children up to 18 years. However, I wanted to mention that there is a draft amendment in the parliament at the moment that consider abolishing the limit of 18 years and also the increase back to 140 euro. We will see where we get. Then we can move to another slide where you can see how the tax bonus is lowered with the higher salary. So the employees with a salary over 4,000 euro per month are not entitled to tax bonus at all. As part of austerity measures, we have already lost 5 public holidays. The reason is that each public holiday turned into working day gains around 150 million euro to the state budget per year. Now I would like to turn your attention to the temporary changes affecting 2 holidays that only apply this year. So we have 1st September, 20th October and 17th November, which are regular working days since 2025. And this status remains also for the future, but 8th May and 15th September will be treated as a regular working day only in 2026. So employees will not be entitled to holiday surcharges for work performed on these days. As of 2026, the ban on retails during the holidays is cancelled. So retail sales are still prohibited only during New Year's Eve, Good Friday and Easter Sunday, and during Christmas holiday. As I understand, it may be complicated to distinguish between a holiday, non-working day, and days when it is prohibited or permitted to have the shops open, especially with regards to surcharges for work during the holiday. So if anyone is interested in a complete list with an overview of what applies to which day, then feel free to contact me via email. I'll be happy to provide such an overview. Now we can go to Schwarz system, which, as you probably know, is an illegal form of work in which person works for a company as a self-employed person based on a business contract. but in reality performs dependent work as an employee. So he works or she works on instructions at a specified time and at a fixed location without entitlement to vacation, sick leave, or severance pay, while the company avoids paying mandatory contributions. So this was tightened, and from tightening of these conditions, the state, in addition to the declared protection of employees, also promises about 250 million to the budget in fines and additional taxes and contributions. So that's why we recommend that you go through the settings, especially if you have some subcontractors, to see if there is a risk that the control body would evaluate it as illegal employment. Fines have been increased. So the lower limit for violation, this rule was increased from 2,000 to 4,000. This is the minimum fine for the hiring someone on the business contract rather than employment contract. And it can climb up to 200,000 euros. So it's a really serious amount. So keep in mind that also the late registration of regular employee is considered illegal employment. So the same fines apply, even though a valid employment contract is in place. Employee must always be registered at Social Insurance Authority prior the starting date of the employment. We do not have that much time, so I will just shortly name the main categories that are determining the dependent work. So since 1st January, these are just four. That the work performed in a relationship of employer superiority and employee subordination is performed personally for the employer according to the employer's instructions and on behalf of the employer. The working time is no longer a criterion for defining dependent work as it was in the past, because many employees already work from home and organize their working hours freely. So it cannot be used as an argument why to hire someone as a contractor and avoid employment. And at the end, you can see some tips on what to take care of when setting up the cooperation with an individual. Just be careful with incorporating your contractor into your organizational structure, to give him some entrance permit to the workplace, not the one-off, but the permanent one. Also work close with the company logo, company's email signature, travel expenses, payoff, or entitlement for similar benefits as other regular employees. Lastly, I would like to talk about the status of equal pay directive in Slovakia. So at the moment, the act on application of the principle of equal pay is in the second hearing at the National Council. So we are waiting how it turns out, and it is expected to enter into force on 1st of June. It is aimed to compare total remuneration for work that is under direct impact of the employer. So this means that surcharges for overtime work, night shift, weekend work, or others are not included in this comparison because they are linked to more work than more gain. But on the other hand, take care about benefits in kind, like company's car for private purposes and others. They all are part of the comparison. So this calls for very tight cooperation between HR of the company and payroll provider, if it's being outsourced, of course, as not only contractual salary is reported, but complex data about all wage elements. And some payroll software providers already communicated that they will not implement the complicated reporting required by this directive. So we recommend you to check with your provider their readiness. And it is also required and may be subject to inspection, the consistent and careful setting of the employee remuneration structure, such as skills, both cognitive and physical, effort, responsibility and working conditions. A company can, of course, assign different weight to individual indicators depending on their relevance to the job, but you just need to be consistent in that. Keep in mind also the right to information and new reporting obligations. Employee has the right to information about his or her level of remuneration in comparison with the average remuneration value of a given job position, and then employer is then obliged to present such comparison within just 2 months. And equal pay legislation also sets reporting obligations for employers with a higher headcount over 100. Keep just in mind that most of the information in these reports will be public. So companies over 150 employees will submit their first reports in June 2027 with 3 years period, and companies over 250 will report annually. Those in the gap 100 to 149 will start report in 2031. So as you have seen, we have had a number of important legislative updates for payroll in Slovakia. So if you have any question on the last slide here, thank you, Lucy, you can see my contact details. So feel free to reach out. And now I pass my word to Monica.
Monica, you're just on mute.
Sorry. So I'm just sharing my screen. Hello, everyone. Sorry, just a minute. Okay, so can you confirm that you see it?
Could you just put it into presenter mode, please?
Sorry. Yes. Okay. So thank you, everyone. My name is Monica Martin. I'm representing ESB Hungary, and I would like to give a short overview about the Hungarian key changes concerning payroll and related employer taxes. As usual in each year, the minimum wage has been indexed in line with inflation and related economic environment changes. It also has effects for certain tax types and many other calculation-related elements in payroll. We have very significant changes in personal income tax allowances, which strongly affect the net wage of the employees, and I will give a more detailed overview about it. We have new type of social security relationship in our Social Security Act. Long-term service agreement is also a key element in this year's tax regime implemented. Also, we have a new regime, a more digitalized electronic way of social security history treatment, which came into force as of this year. Also, certain other social changes will be also mentioned in the presentation, and I will also continue at the end with a small overview about the equal pay regulations in Hungary. As I said, the minimum wage in Hungary has been indexed parallel with last year. Hungary has two types of minimum wages. One relates to the guaranteed monthly minimum wage, the standard one, which is applicable for a wide number of employees, whereas for qualified positions, we need to apply a higher level of guaranteed monthly wage. The first type, the standard minimum wage has been increased with 11%, which is a significant increase. However, with this amount, which is approximately 838 euro, we are still in the last bracket of the EU standard minimum wage. So Hungary is still, I have to say, an interesting opportunity for investors, because we are among the lowest minimum wage countries among our region. However, it's very important to note for all investors that for qualified positions, the second level, the 969 euro amount must be granted in half. And of course, in case somebody is working in part-time or on hourly wage or the hourly rate engagement, there are different brackets offered for within these numbers. As I mentioned, the Hungarian tax regime significantly changed, and there are upcoming changes already announced for coming years concerning personal income tax allowances. First, I would like to give a high-level overview about the tax burdens. Hungary in itself did not change the key tax burdens on salary compared to past years. So we still have a relatively low social contribution, 13%, a flat personal income tax with 15%, and the social contribution deducted from the employees, which is 18.5%. So the total tax burden is 46.5% in Hungary. And you can see, obviously, the gross to net calculations for tax planning purposes here. And the reason why I will give more details about the personal income tax regime is the fact that it is possible to fully decrease the personal income tax payable by the employees, which was not possible in the past years. But as regulative changes happen year by year, it is a very important tax planning advantage for Hungary that offering the net wage for a private individual will strongly depend on the personal income tax allowances he or she may be eligible for. And in this way, the personal income tax can be decreased to zero. There are certain rules in the allowances, how to apply and decrease the personal income tax base payable or deductible from the employee. The order is very important because if somebody has certain limitations for certain allowances, they still have the option to move forward and basically go to nil personal income tax payable if the allowances, which is listed in the sheet, can be reached by them. One of the biggest changes in current year's regime is the mothers under 30-year tax allowance. It also means for this year that without any limitation in terms of annual salary from the employment, it can be zero for mothers having in the young age under 30. That is a quite unique benefit and very widespread these days. Also, we have more benefits for mothers having 4 children and also raising more children. So in total, the benefits which Hungary gives for mothers in terms of personal income tax allowances is quite unique among the EU because each country supports it, as we also heard about Slovakia. But the type of benefits and the wide range and certain without any limitation gives a very interesting opportunity for mothers and to boost having more children in our country. There are also typical benefits which is coming from past years allowances. There is no change, so infant care benefit, child care benefit, adoption fee related allowances. Also, young people are fully exempt from personal income tax if they are under the age of 25, which is quite unique. Again, first married couples can also receive allowances, and we have a very long time working family tax allowance system. As I mentioned, the family tax allowance in itself is the last pillar in the personal income tax decreases. But based on last year's efforts and compared to 2025, this benefit has been doubled. The importance of it and the message from the government is to really support families having children. And that's why in 2 steps, the mid of last year, from July 1st, 25, and the second half of the increase is effective from this year's January, basically doubled the salary, the personal income tax allowance So, which it means a very significant increase in the net salary for the family members. Also, the very new system which came into force and really unique among EU countries is the full exemption for mothers having more children. The first attempt for granting this exemption happened from January 2020, when we had a new tax regime where mothers raising 4 or more children received full tax exemption, and this is a lifelong tax exemption. This exemption started to be widespread from October 2025, and now mothers raising 3 children are also fully exempt from personal income tax in Hungary. And there are more options from this year, January, among this year's tax regime changes. Mothers under 30 are also eligible for full income tax exemption, and also mothers under 40 having 2 children. And the current regime says that from 2027, mothers under 50 having 2 children become exempt from personal income tax without any limitation. Of course, it's very important to note that these changes, these personal income tax full exemptions, apply for wage-related compensation, so no other type of personal income tax base elements, but from employment type of salary, this deduction is applicable. And the current plan is from 2028. Also, mothers under the age of 60 having 2 children will become also lifelong exempt from personal income taxation. As I said, the amounts are indexed year by year. So the young people tax allowance under 25 has also a maximum limit. This is very important for employers employing young people, because there is a huge gap when they reach the age of 25, because all Hungarian employees need to take into account that it means immediately 15% decrease of net salary. So employers struggle and need to be really careful how to compensate it, because it's a quite special system which we apply for a few years. And also there are certain allowances which I named before, and I also list here. One of them, which is also quite common, is the personal allowance. In case there is any health disability, then employees can receive allowance in those cases and certain compensation from their payable personal income tax. And also the new limit for first-time married couples who also receive for the first 2 years after the marriage certain compensation from their personal income tax base remains this amount, 33,335 HUF. There is a very special rule in Hungary. Each year in January, employees need to report through payroll the employer what type of personal income tax allowance they are obliged for. And it's a real administrative burden to collect from each employee the various types of allowances in order to run already the first month's payroll in a proper way and decrease their tax payables to reach the desired higher net salary. And there were certain easements in this year whereby the government also tries to minimize the administrative burdens of the employers, not to repetitively ask the same papers each year, because it's obvious that for certain tax allowance types, the circumstances will not change. Some of these are listed in this sheet. So mothers raising 3 children are not needed to submit declaration year by year, because it's an active status in most cases. And until the employee does not submit new declaration that they do not ask this type of allowance, employers have the right to deduct continuously without each January asking for the same tax advance declarations to grant this type of allowance for the employees. We have a new type, so-called long-term service agreement in our social security regime. There were two main categories so far. One is the typical employment, and the other is the mandate agreement setup, whereby if somebody worked just ad hoc for a firm, not on a regular basis, it did not create for them social security coverage. That's why the regulation implemented this new type of so-called long-term service agreement. In this way, if the employer declares that somebody is working under a long-term agency relationship, it may constitute a full secured status. Of course, the condition says that the payment of the remuneration must reach at least 30% of the minimum wage. The advantage of it for the agent is that it relates a full legal relationship and a continuous insurance coverage for this type of service agreement setup, whereas in the past we had to announce it retroactively, and these persons employed under service agreements were not insured in Social Security fully. The next change is a social security booklet system. Hungary tries to be more and more electronic and digitalized in terms of tax compliance and payroll compliance rules. And until the end of last year, we had a very long-term old school paper-based social security booklet applied. Each employee had to carry it over, and each employer had to register the actual status from the go live and the end of cooperation with the firm. This was used for the employees when they became retired, and they had to ask for the certain pension calculations. And of course, because all of the reporting is done electronic way, tax reporting to the states the data is available online. The government introduced a new interface via the client gate portal where these data will be visible for the employees. So in this way, we can avoid this last real paper-based administrative burden, which had to be applied in case we run through payroll during an eventual exit from a firm, the period of the insurance at a certain firm. So from this year, employees, if they have client gate access, they can go to the website and anytime check the history and the current status, whether they are having active social security coverage, and also the historical years. The current rule implementation means for employers that the current paper-based booklets needs to be handed over to the employees. Or current practice to our clients is that we can still keep at the company, and we would hand it over only in case of an eventual exit. But of course, if employees would like to receive back this document, it must be handed over for them. We have a typical fringe benefit system in Hungary, which is used quite widespread. The advantage of the fringe benefit, and the most important fringe benefit, is the meal ticket, meal voucher, which is granted by employers. The rules remained unchanged, and of course, if we use this fringe benefit called SAPE card, a meal card, actually we can spare approximately 13% tax compared to the official salary tax burdens. And the special rule, which has been implemented in the year-end tax package, is that between the 1st of December and the 13th of April, it is possible to use these safeguard spending also for cold food, not just hot meals in canteens, which is the most typical usage for these meal cards in order to support employees and give more free hand to use this type of fringe benefit in a more widespread way. As I said, there are some other administrative changes in the social security system. And prior going into details, I wanted to mention here the fact that Hungary's social contribution tax rate has been decreased very significantly over the past 10 years, and currently it is only 13%, which is the lowest among the V4 countries. We have certain rates which are updated year by year. One of them is the monthly healthcare contribution. It is payable by individuals in case they don't have any employment relationship and they want to keep the health insured status. This amount has been increased to 10,000 HUF. From January, employers who work part-time, they have to pay based on the actual minimum wage, which is increased now, the social security coverage if their gross salary does not reach 30% of the minimum wage. We have a so-called rehabilitation contribution, which is a very unique tax in Hungary, and many employers or investors don't know about it. It also means an extra tax burden for those employers who employ more than 25 employees in average during an actual month. And in case the total headcount does not contain more than 5% of disabled people, there is a special tax contribution called rehabilitation contribution, which is payable, and the tax amount is relatively high. So this amount has been indexed in line with last year's trends, and it also increases the tax burden payable by employers having more than 25 employees. We have a simplified administration in terms of sole proprietors, because in the previous years it was a applicable multiplicator, 112.5% that had to be used on the actual payable amount, which they take as a guaranteed wage from their companies, and now it's not applicable anymore. So certain decrease in their tax burdens of the sole proprietors have been implemented. And in parallel with it, in order to support the private entrepreneurs who are obliged to pay monthly payroll-related taxes, calculate payroll monthly, the trend the government would like to avoid is to grant them more flexibility in tax administration. And only in this type of small entrepreneur income taxpayers, it is possible to avoid a monthly social tax return filing and tax payment, but they can use the quarterly payment, which is quite unique change for many years. And the Hungarian regime only insisted on the monthly tax payables and calculations. And in this way, we would like to support the small entrepreneur tax system payers, that they can decrease their administrative burdens here. Also, there is a new online system called Complex Employment Relationship Register, which will go live from October. The aim of this change is to grant the employees and also the employers the full picture about all type of taxes declared, paid, insured status about the employment as a real-time database to support any other administrative actions going forward. We have a simplified employment scheme, which is quite commonly used in terms of hotel industries, agriculture, or other industries, where it is needed to use some ad hoc workers to support the peak periods. And each year, the tax burden must be indexed in line with the increase of inflation and the minimum wage. From this year, the daily tax burden payable on casual workers also increased to 4,800 HUF. And also there is a decreased amount for agricultural and touristic seasonal workers, which is half of the tax burden. So it is a real tax saving for simplified employment scheme in these industries. However, I need to point out, as I explained on the slide, that the simplified employment scheme cannot fully support the full-time employment. So the limitations, maximum 180 days per year, 15 days in a month, and 5 consecutive days must be careful and must be kept by each employer. So it's not possible to use it for long-term employment relationship, really only for ad hoc cases. And the total tax burden, if the brackets I mentioned in the slide are kept, does not contain personal income tax payable. So it is a real beneficial tax setup to use for certain companies who are required to use seasonal workers in certain cases. Equal pay rules for Hungary, as the EU directive transposition deadline is set for 7th of June 2026. At the moment, the Hungarian government has not published any transposition law. We also set certain rulings, and we tried to assess what type of regulative plans are public, but at the moment no fixed information is available. Unfortunately, we expect the final regulation at the end of May, so very close to the go-live date, which is really challenging for our clients. Hungary implemented certain changes in the labor code over the past year, but still there are many clarification questions that is not available at the moment. Because the first mandatory reporting covers the full year of 2026, we need to be careful and take into account certain actions. The reporting obligation will depend on company size, as it is set in all other countries. So for employees below 250 and 150, of course, the first reporting deadline is 2027 June. These ranges will be applicable, but it's very important to emphasize for all employers, even for those who have to report on voluntary basis and do not employ more than 100 people, that these rules must be carefully kept. We emphasize that we need to be prepared for the reporting obligations, and based on the current EU directive, the most important action that employers need to do is to prepare the salary ranges and base salaries for the current employees in order to be able to disclose them later on properly. We have to be careful to keep to avoid having more than 5% difference between the pay gap of men and women workers. So we need to analyze and conduct assessment within the firms and take corrective actions if needed. We emphasize our clients that we need to review internal policies and unify job descriptions and job architecture systems. We need to introduce clear salary band structures, and already for 2026, because the employers who are obliged to report for this year need to report continuously from January. So already from the 1st January salary indexations, employers needs to be really careful to use clear salary band structures. Also, internal policies needs to be updated, and we also try to draft the reporting template But as I said, it's very difficult at the moment since the current regulative framework is not publicized for Hungary. We are in contact with the regulative bodies, so as soon as there will be more inputs, we try to support our clients, and even if anybody from the audience will have questions, we try to support you how to be prepared for these changes. I would like to thank you for your attention, and I pass over the words to Poland. You are on mute, Justina.
Hello, everybody. I'm just trying to share my screen with the presentation for Poland to close our webinar. I don't know if you see my screen. Do you see my screen?
Yes, we do. Thank you.
Okay, thank you very much. So as we don't have a lot of time, so I will close our webinar by the presentation of changes for Poland. This year, we don't have a lot of changes related to payroll, rather HR or labor law changes. So this is a small agenda of my presentation. So I will pass to the first topic regarding basic payroll figures. We don't, as I said, not a lot of changes regarding numbers. So we have just new minimum wage from January 2026, which is 4,806 zloty, and consequently we have minimum hourly rate which amounts to 31 zloty and 40 groszy. Also, the limit of contribution paid for pension and disability insurance changed from 2026 as each year, and the new value is the 282,000 zloty, 600 zlotys. And also the coefficient to calculate holiday compensation for holiday unused annual leave amounts to 20.92. And the big change in Poland is the new rules of calculation of the length of service. It means that starting from this year, we have new catalog of activities included in the calculation of length of service for employment. Until now, we have the only employment contract which was taken into the consideration. But from this year, we have also other activities possible to include as new periods for this calculation. So I will maybe not speak about all of them, but you will have the list of these activities in the presentation. And the new rule changed the employee's qualification for important benefits as annual leave entitlement, and also longer notice periods. So the employees will have more holidays and will be quickly qualified for longer protection based on longer notice period. And these new rules will be applied retroactively, but of course the employee must document his different periods of activities by special documents as contracts, proof of payment of Social Security, other evidence of work, bank transfer, PIT, also PIT forms, etc. And we have different times for new rules implementation. From 1st of January, it was introduced for public sector, and from May 2026 for private sector. Another change in Poland is the change regarding the pay date of unused vacation leave. Starting from last week, 27th of January, compensation for unused vacation can be paid with the salary. So on the time, the same time as the salary is paid. before it should be paid the last day of employment, which was not always the last day, the pay date of the salary. So the compensation must be paid on the same day as the employer pays regular wages, but with one exception, that if the regular payroll date occurs before the employee's last day of employment, the employer must pay the compensation within 10 days after the employment ends, so later. Another change that we have from 2026 is the change related to medical leave control, and we have some steps here. So some of them are introduced from 2026. Another one will be introduced in 2027. And the changes affect social insurance institution control procedures, also definitions of permitted activities during sick leaves, as also the ability to work during sick leave in certain situations. So from last week, the power of social insurance institution is very strong. They can control all sick leaves, also those issued for care of a sick family member or child. Social insurance institution can ask additional questions or explanation from insured person during a control, and also send information about irregularities to regional medical chambers. And of course, the insured person will lose the right to sickness benefits for the entire period of sick leave if some irregularities will be found by social insurance. And to eliminate some doubts, new definitions will be introduced from April 2026, 13 April, the definition of gainful work and activity inconsistent with the purpose of sick leave. So you will have the explanation of this definition in the presentation. And also from the same day in April, the social insurance shall be authorized to carry out inspection of sick leave taken after the termination of the employment. And as I said, another change will come in 2026. So you have the information here in the presentation, and certainly maybe we will speak about it next year. But it will we will have the possibility to work under specific condition during sick leave. And if the employee will have two employers, so for one of them it will be possible to issue the sick leave, and for another one not. So these changes will come next year. And also the single benefit period will apply from January 2027 to an insured person, irrespective of the number of titles to sickness insurance. So it will concern the employees with multiple employment. So a few words about equal pay. So as I heard my colleagues from other countries, so what I can say that it will be, it's very similar, that the same regulation that we have in Poland. We introduced already some rules starting from December 2025, especially regarding information about salary before starting the employment. Our job advertisement and job titles must be gender neutral. Also, there is a ban on asking candidates about previous or current remuneration. And when we will inform the employee about the candidates about remuneration, the information must cover total remuneration, not only base pay, but also bonuses, benefits, and all pay elements. And as employer, we will have the obligation to conduct the job evaluation using neutral criteria like skills, effort, responsibility, and working conditions. So we will we will identify categories of employee doing equal or comparable work, or establish transparent pay structures and pay progressions rule. And it will, of course, the employee will have right to to have information about, to request the information about individual pay level for the category of employee. That information must be provided to the employee, of course, within statutory deadlines. And here are some information about pay gap reporting and reporting deadlines. As what I can see, it's really the same as for Hungary, so maybe I will not repeat it, but you will have just all details here in our presentation. And as for other countries, if a gender pay gap of 5% or more is identified, so the employer must conduct corrective actions. And of course, there will be some fines for non-compliance, and we will have also designated equality bodies which who can control the implementation and the application of equal pay rules. Also, the National Labor Inspectorate will have the power to oversee the implementation of equal pay rules. So to close, I will just speak shortly about 3 other changes. The first, I think it's very important because as in Hungary, we try to digitalize HR and payroll area. So the form of submission of certain documents has been changed to either paper or electronic form. Previously, it was only in paper form possible. So here you have also in the presentation the list of documents that from this year can be prepared in electronic way also. And the last to change are related to amendments to collective labor agreements. This agreement, the main change concern the fact that this collective labor agreement can be also registered electronically right now, and we will have a central system dedicated to collect all information. And the other change is related to company social benefits funds. Right now, it will be required to be the regulation will be consulted not with a single employee, but with several employees selected by the workforce, by the employees to represent their interests. And the last change is related to definition of mobbing. Last year, a draft bill introduced new definition of mobbing into the labor code, but this new rules new definition is still under review, and probably this year we'll have more changes or more legislative work on this topic. So thank you very much for your attention. It was the last presentation from our side. Thank you very much once again, and we hope that all this information will be useful for you, and it was interesting for you also.
So thank you so much for presenting all of that information. There's a lot there to go through. As we've promised, we will share the recording and the slides, and everyone has the contact details for each of you should they have any further questions. So thank you so much, and I'm sure we'll see you again next year.
Thank you very much.
Thank you. Bye-bye.
Bye.
Thank you.
Thank you and
Bye.
bye-bye.
Bye.